We had problems in Sony. The government sent in some money. Farmers were paid. As I'm talking now, the farmers in Mumias are being paid because His Excellency the President of late brought us a check of 1 billion. We want to say thank you so much for that from the government. We also want to say that in the past, we have had problems about fertilizer. There has been a subsidy from the government. Now we are buying fertilizer at a cheaper price as Kenyan farmers. We are also saying thank you very much for the advance that the government made to the millers, that now the farmers can get advance as they deliver their cane to the millers. That, as farmers, we want to say thank you so much, and we want to ask the government to continue assisting the farmers on the same. This issue of the agreement has been a problem. You have had us as farmers resisting, and it is good that a senior government officer today is saying in daylight that there was no agreement that was signed between the Kenyan government and the Ugandan government in terms of bringing more sugar to this country. I want to say thank you so much.
We note with concern that some misleading reports, however, have emerged purporting to be information on bilateral discussions, alleging that Presidents Kenyatta and Museveni had signed an agreement on behalf of their governments to allow for importation of sugar from Uganda. The government of Kenya wishes to clearly state that no trade agreement or any other deal was signed between Kenya and Uganda governments. Uganda has consistently remained Kenya's biggest trading partner. Trade between Kenya and Uganda is in various sectors that include, but not limited to, banking, insurance, marketing, ICT, and other commodities. Last year, the trade volume stood at over $700 million in favor of Kenya against Uganda's $180 million. The Uganda state visit accorded both countries the opportunity to discuss trade and matters of bilateral nature, a record of which is contained in the official communique, which will be circulated to all of you shortly. Kenya's sugar production has not been sufficient to cover domestic consumption, resulting in an annual deficit of between 200 and 250,000 metric tons. In order to bridge the deficit, imports are first sourced from East African partner states. The balance of sugar imports are then sourced from COMESA member countries if the East African countries do not fulfill those gaps. And only after COMESA has been considered will then other countries in the international markets be explored. Uganda has been selling sugar to Kenya since 1997. Under the customs union of the East African Community, sugar from Uganda enjoys full access into the Kenyan market. Additionally, being a member of COMESA, Uganda is entitled to access the Kenyan market on COMESA treaty terms. Sugar imports statistics between January and July 2015 show that the largest quantities of sugar into Kenya came from Zambia, while other imports come from Malawi, Swaziland, Madagascar, amongst other COMESA member states. The government acknowledges that there are a number of challenges facing the sector, such as the high cost of production, high debt levels, and obsolete technology in certain factories. There are ongoing efforts by the government and industry stakeholders to address these issues. The government recognizes that sugar sector is an important strategic sector for our country and would like to assure farmers, millers, as well as public in general that all efforts are being made to streamline the sugar sector in the country.